Right. So I imagine a lot of viewers are familiar with Sea Limited, but it is a holding company that primarily operates across seven markets in Southeast Asia and Taiwan, though it has expanded into Latin America and Europe. And we will touch on that in a moment. But if you're not familiar with Sea, it's a holding company that basically owns three businesses. Shopee is an e commerce marketplace, Garena is a video game developer and publisher, and Sea Money is a provider of digital financial services. Three high growth markets. If you took a look at the stock, it was down about 3% today. So let's take a look at the recent quarterly results. Revenue came in at about 2.7 billion. That was up 122%. So another quarter of triple digit growth for C. Beat on the top line. And then to break that into the three segments, Garena's revenue was up 93% to 1.1 billion. And within this segment, Garena is best known for Free Fire, a mobile game, a battle royale mobile game, and it is the highest grossing mobile game in Southeast Asia and Latin America, and it's held that title for the last 9 quarters. It is also the highest grossing mobile game in India, and it's held that title for the last 4 quarters. Very strong competitive edge there in its gaming segment. Shopee, the e-commerce marketplace, revenue was up to 1.5 billion, and that was up 134% over the prior year. And again, the company has a strong competitive position here. This is the most popular shopping app in Southeast Asia by a wide margin. It receives twice as many monthly views as the next closest competitor. It's also the second most popular shopping app in Brazil, so that's going to put it right behind Mercado Libre. And then in the third segment, Sea Money, digital payments, revenue here was 132 million, and that was up 818% from the prior year. So that platform is growing very rapidly. Looking at the bottom line, the GAAP loss was 84 cents per diluted share, and that was a significant miss. And that is primarily, I think, why the stock fell today. So a miss on the bottom line. On the bright side, cash from operations through the first 9 months of the year came in at 513 million, and that was up 39%. At least generating positive cash flow. In terms of the highlights, there's a few things I wanted to point out here. First is that its video game publishing and developing segment, Garena, is actually profitable. It operates at a profit. The operating margin was 55.6% in the most recent quarter, and that's actually higher than it was last year. It was 49% in the same quarter last year. So becoming increasingly profitable, and that provides C with some cash flow that allows it to invest in its other businesses. On a negative note, Shopee's operating loss more than doubled, and this, I think, has been something that's been a concern for investors. So Shopee is losing more and more money over time. But I think, if I could offer a few counter arguments as to why that would be a problem. C already has a strong competitive position in Southeast Asia. Like I mentioned, it receives twice as many views as the next closest marketplace, and it is expanding aggressively into areas like Latin America and then Europe more recently. It started recruiting sellers in Poland back in September. And it's also mentioned moving into India, and more recently, Spain and France are apparently on the company's radar. And it's announced that it's providing free shipping in Europe, and so the logistics costs associated with that expansion are going to, that's going to hit the company. And then it specifically mentioned increased marketing incentives and an increased marketing expenses. They're providing deals, they're trying to generate interest with consumers and sustain or grow their market share. And generally speaking, I think that makes a lot of sense. E-commerce is a tremendous market opportunity. It's still growing quickly, and it makes sense to, try to maintain that strong competitive position that they've built. So generally speaking, I'm not too worried about, Shopee's operating loss more than doubling. It's definitely something to pay attention to. But I think it's, they have a profitable segment in Garena, and I think they have plenty of opportunity in e-commerce, and I think it makes sense to invest aggressively right now. The company doesn't provide
Hey,
Uh,
Trevor, do you mind if
yeah,
I wanted to double click on that operating loss a little bit with you too?
sure.
And just so that our members understand, C Limited is primarily a third party platform. So if you look at the e-commerce revenue this quarter was 1.3 billion, and those were just for its third party sales. It also is starting to get into the first party business, which means they'll buy goods and then resell those goods. They'll buy them wholesale, business to business, then sell them out, business to consumer. That was about 279 million. So what, a sixth of the size. So the goods portion of it is actually profitable as well. They made about $30 million of gross profit from those 279 goods of sales. And also, the e-commerce business is profitable from the sort of the goods and services, but it's the marketing piece where they end up losing the money. So, I think about it, Trevor, as they have a great infrastructure. It's really just attracting folks to the platform, I think, is where they're spending that extra money.
Yeah. Do you think it makes sense to be investing in marketing the way that they are, Brian?
Yeah, especially with, they're starting to get into more and more countries, and when you're going up against Mercado Libre, that's been in the region since the 1990s. You need to do a little bit of advertising. Now, all of that money isn't advertising in Brazil, but it's certainly, they're expanding into more countries around the world, and that's going to be part of that's going to be part of the deal for a while.
Yep. I agree. I read something recently that mentioned they might be looking at Argentina moving it. So they're in Brazil and Mexico, and they might be looking at Argentina as well.
Yeah. At first, I thought C Limited had reported a great quarter in Brazil because I saw Mercado Libre took a stock hit today, but it was more related to they were offering stock for raising cash. So they might have timed that. The timing was quite suspicious, but
So the last thing I'll mention is that they did raise their e-commerce guidance. They're looking for 5 billion to 5.2 billion for the full year, and that would be 135% growth. So all things considered, I think this was a fairly good quarter from C Limited. They are still losing money, but they have about $6 billion in cash on their balance sheet versus 1.8 billion in debt, and the positive cash flow is a good thing. And then more broadly, there's still a lot of opportunity in their core Southeast Asia market. Internet penetration is still in the mid 70% range in Southeast Asia compared to about 94% in North America. So there's plenty of room for that to grow. And I was looking at a report earlier today that's forecasting that online spend is going to grow between 4 and 6 fold in Southeast Asia by 2030. So it's gonna go from about 175 billion today to potentially 1 trillion by 2030. So I think investing in their business the way that they are makes sense. The market is growing quickly, and I think it makes sense to stay on top of that opportunity.
Yeah, I'm a shareholder and just a fan of the report. Losing a couple percent today on the stock is 5 years from now, you're not going to remember our discussion.